You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again. It's Thursday, noon Central, 1 p.m. Eastern time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which many of you are gorging yourselves these days. And we don't mind. That's why we created it. We'll pay the bandwidth. We don't care. Come on in. Kick the tires and light the fires. You got 13 plus years worth of content. Many of you have been digging deep into the archives and enjoying us on a wide variety of platforms. It's always fun to hear which esoteric platform and which particular way, certain speed, a certain way you guys like to consume it. We love to hear all that stuff. Keep it coming. And hope you guys are enjoying the slew of content. Hopefully we're keeping you busy while you're stuck at home and also fretting a bit about these markets. We got some content for that. So check it out. If you're just listening to the Option Block, make sure if you haven't already, most of you already have, subscribe to the full network feed or grab the app or check us out wherever you like to get it on your major platforms. And keep those questions coming. We know a lot of you have them, so keep them coming. We'll try to walk as many of you off the ledge as possible here. And joining me on the old program today, first off, let's go out to the far, far shores of this here United States. Some may say law does not really reign supreme there anymore. He has his own law. All he has to do is battle against the clam pirates. Yes, I'm talking about the rock lobster, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to the program. How goes the land where no law reigns, sir? AKA Maine.
I left my rock for a while to go into Portland, and oh my gosh, it's like a ghost town.
You went to the big city? What are you doing? This is the wrong time to go to the big city, sir. What happened? You had to buy more LL Bean boots?
Exactly. No, my computer crashed. Everything fell apart yesterday, so I had to go. I had to go into to the big city. So wow. My gosh, no cars, no nothing.
Wow. So there was still a store open for you to get something. Would they bring it out to your car? Is that how it works?
Like Best Buy brought my laptop out.
Wow.
And I went to the computer repair place was open because it was a strategic business. And so anyway, I'm getting a new computer built. But, oh, my word, like crazy because our little town had that, they got the whole thing going on. And, in a small town, it's pretty odd. There's not many people walking around anyway, but there's even less. So freaky city. I'd like it to end any time now. I'm ready for it to be over.
Wow. It's bad, A, when the Rock Lobster has to go out to the big city. That's not something he likes to do. And B, when he's ready for social isolation to end, the man who's predicated his entire life around social isolation is ready for it to end. Then things have gotten crazy. I concur with that. I took a little jaunt down Michigan Ave the other day just to see what it's like, and it is kind of eerie. It's a bit of a ghost town, large. That's, of course, the Mag Mile here in Chicago, listeners, the big retail and tourist destination, big shops, Disney store, big stores, boarded up. It's like a hurricane's coming to town, but it's crazy. So, yeah, these are definitely interesting times. What's the old Chinese curse? May you live in interesting times. We are certainly living through them right now. And also joining us, a place where they don't board anything up because it's St. Charles. They have the weather shield. Everything's good out there. Paradise on earth. Of course, talk about Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always good to be here. This is it's good to have contact with the outside world via technology, but I'm kind of with Andrew. I'm really getting sick of seeing people on Zoom. I want to see people face-to-face again. That'll be nice.
Well, we got 2 votes for doing the option block live in the studio. I got to hate to break it to you guys. It ain't going to happen, at least for a little bit. When we do, maybe we'll have to have another big option block party here in the old studio. Get the pizzas like we did the other day. Bring the Viceroy back for old time's sake. That'll be fun. And you know what, listeners? We thought, one Andrew, just not enough for the program these days. All of you are writing in saying, we want a second Andrew. Well, your needs have been fulfilled today because holding down the TradeStation hot seat today, we have Andrew Rocco. He is the manager of educational content strategy. You guys have the best titles over there at TradeStation. David's the market intelligence, your educational market content strategy. I love the titles over there. But Andrew, welcome to the Option Block program, sir.
Thank you so much, Mark. I'm a big fan of the show, so I'm happy to be on. And the one mistake I've made so far is not having a nickname. I love your co-host nickname, so I really got to come up with one next time on. We'll get there.
They have to be earned. I have to dispense them over time. I need to get a sense for what you're like on the program, and then the nicknames kind of flow freely from there. But really quickly, before we dive into the trading block, you're a first-timer. Why don't you go ahead and give our audience a real quick overview of your background, indeed the financial and option space, as well as what it is you do day-to-day over there at TradeStation.
Sure. So, yeah, I come from a background in equities trading mostly. Prior to starting at TradeStation at the end of last year, I was running a growth equities book for a family office in California called O'Neill Capital Management. And I was also spearheading the education department for Investors Business Daily newspaper, which was started by the same founder named William O'Neill. I moved back from California down to sunny South Florida to work for TradeStation, where I've started to kind of dive into options more in my individual trading. So far it's been really great. What I like is we kind of cater our education and our platforms towards all different types of traders and all different levels. What I've learned in using the software is you really can't outgrow TradeStation software. You can keep it as simple as a few moving averages, for example, or if you want, you can go to our desktop platform and our mobile apps, and you could do really a deep dive into our thick platform. Our clients even have the ability to program strategies into our system, like a programming software called Easy Language, as well as get educated on all things options, equities, and futures. So like I said, I've moved more and more into options from equities, so I'll be coming at this through sort of that lens. So I think some of your newer viewers might be able to relate to some of the things I'll cover today.
All right, thank you for that. And now let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading out there. And, if you just flipped on your screens this morning, apropos of nothing else, you might look at the screen to say, wow, all is right with the world. Everything is moving in lockstep to the upside, including gold and oil. Some of those maybe not supposed to do that, but we'll get to that in a little bit. You would never know that most of the news swirling out there is actually pretty terrible. We've got a horrific death toll now coming out of New York. There's more cases actually in New York by itself than there are anywhere else on the planet. So New York has really become the locus, unfortunately, for this this disease and one of the worst death tolls we've seen in one day either. We've seen terrible jobless claims numbers yet again, hitting that 6.6 million number out there, which puts pretty much current unemployment right around 13 plus, almost 14% out there. Most economists are kind of pegging at right now. It's not quite at the 20%, but we're not quite that far away from it either, and it's only been a week since we jumped up, so more bad news out there. We got former Fed Chairman Bernanke saying our GDP could drop as much as 30% in all of this recession to come here. GE and Starbucks already getting out ahead of the curve and warning about bad earnings. We got even everyone's favorite daily primetime viewing now. Dr. Fauci said, we'll never shake hands again. That's actually a bonus. I think that's actually a positive story. I think shaking hands, probably a barbaric practice, should have gone the way of the dodo a long time ago. So let's all listen to him and get rid of shaking hands going forward. But in spite of all that madness and horrible, horrible news, we're still rallying. We're still up. You know, all Fed had to do was whisper that magical word of stimulus into the market's ear. And that's all the market needed to hear to freaking shrug off everything else. And is OPEC, are they going to make these cuts? Are these cuts reasonable? It doesn't matter. We got Fed whispering stimulus in our ear. Let's rally. And the markets are feeling that love, up over 2%, kind of giving some of that back a little bit now in some of them, but still up over 2% in the S&P, about 2.15%. The Dow also up about 2%, a little over about almost 2.1%. NASDAQ, uncharacteristically the laggard, up a paltry, a meager 1.2%. So, of course, talking about gold. Gold has been a weird one of late. Some folks have been talking about, we were talking about vol views last week, our old friend 50 Cent, talking about maybe using gold as a hedge. Well, if he's doing that right now, it ain't exactly working out too well. Gold's also up about nearly 4% because, go figure, the news is horrible. So, of course, gold's going to be up. So it's another one of these times where gold hasn't exactly been perhaps the hedge asset some folks might want. And, of course, crude getting a bit of a lift out there as well. All this talk about OPEC, what's going on out there. If you want to dig your teeth into more of that, stay tuned. We'll be doing that on TWIFO in about an hour and 15 minutes or so out there, breaking down all that fun. We're going to be talking a lot of equities out there, spoiler as well. So if you like the option block, make sure you tune in to TWIFO because equities are leading the charge every week out there to the upside and to the downside. So there's a lot to parse out there as well. So we'll be getting all that in a little bit. Come into showtime. We have, of course, our old friend VVIX. We'll start with VIX before we get to VVIX. VIX is right about 42 3/4 or so, down about 1.5 from last show. So still pretty firm, which is kind of what I prognosticated for vol views, which, by the way, on last show I totally forgot on last vol views that there's Good Friday this weekend. So unfortunately, we were predicting for a day where there will be no show. There will be no vol views tomorrow, unfortunately. But we'll be back again next week to bring you all the fun vol talk. VVIX, a.k.a. the vol of vol, 140s down 6 points from just our last show. And our old friend VXX kind of unched down about 0.3, 42.3 out there. I think we'll get some of that in a little bit. But let's go around the horn. Let's start, go the opposite of the way we came. Let's start back in the trade station hot seat. The other Andrew, that's what we'll call you for now, for a nickname. Andrew, what is lighting up your tape today, and what are the folks at TradeStation? What are they up to today, sir?
Yeah, so I would put what our clients are currently trading into three major buckets currently. What I would say is the most popular, of course, is the S&P 500 and the major indexes. However, I would point out in general, I know a few weeks ago, my colleague David was on, he was saying they were trading that mostly. Now they've moved over toward individual names again. So that's the first bucket, would be S&P 500. They're moving into some names that are showing relative strength. So names like a Tesla, AMD, Apple that have been stronger than the market overall. And then they're also moving into a few beaten down names like Schlumberger, Hilton Hotels, Wynn, the casino operator, as well as Boeing, which is, of course, obviously got crushed over the last few months. So it's interesting to see the move from more index trading to individual names. So it makes a lot of sense as the IV is no longer jacked up as much as it was a few weeks ago. The relative strength type of names make sense in that what I've found is 3 and 4 stocks tend to follow the overall market direction. So naturally, traders want to see kind of which stocks hold up the best, meaning they might be regaining the 50-day moving average like an AMD, while the indexes are still trading below the 200-day moving average. So I like to think of these type of names as a basketball being held underwater. It can really only be held under for so long before coming to the surface. So once that market pressure is relieved, they tend to move to the upside and outperform over the next few months. And then the last bucket, which we talked about, are the names that are kind of mean reversion potential. Those ones are flying today. At least some of those names are flying today. And kind of one thing my mentor told me is never shorten the hole. And today is a great example of why you don't want to be shorting those names in the hole. Because once these names get beaten down, that short interest spikes, and we have some of the moves like we've had in recent weeks, and it can really be a recipe for disaster. So a lot of those names we're putting in those big hammer type candles and have squeezed shorts to the upside. So I'm keeping in mind that sometimes stocks bottom while the news is still negative. So, of course, right now the news is really negative, although those stocks, at least in the midterm, have found that bottom. And a great feature you can use to track this stuff in TradeStation is called Hot Lists. Basically, you can put in almost any type of data point and screen our database of thousands of stocks real time to bring up what you're looking for here.
I like it. You can tell the man is the manager of educational content over there because he came equipped with his own analogies. I like that basketball analogy. I may have to borrow that on occasion out there. I put borrow in quotes there, Andrew. But I'm curious, Andrew, you kind of mentioned that bit of a migration away from the large indices toward the individual names. Obviously, we've been rallying for a while, so I certainly wouldn't blame them if they're piling in long. But what are you getting the sense for anecdotally as you're watching all this flow over the last couple of weeks? Does it seem like TradeStation clients in general, are they buying this rally? Are they thinking that this has some legs to it? You think they're being a little bit more strategic in some of their names? What are you seeing in general as they're starting to move into some of these other positions?
Yeah, I mean, it feels like they're putting a little bit more risk on, but I would imagine it's kind of 1 foot out the door, which is kind of in the same boat as I am. I'm not going to argue with price. At the same time, we've come a long way off those lows. In recent weeks, I was playing kind of the common stock because the IV was so jacked up, as I mentioned before. But now I've kind of dipped into a few options. We're coming into midterm support here, so cautiously long, I would say, would be how our clients are looking at it at this point.
I like that. Cautiously long. We may have an episode title already here, just a few minutes in to the show. Let's go out to the other Andrew now. Let's see if you can top that, Mr. Rock Lobster, he who does have a nickname. Mr. Rock Lobster, sir, in addition to your soul-crushing trip to the big city, what is on your radar? What is lighting up? What are things going on? What's going on in the crazy, super cool vol trading club these days, sir?
The vol trading club, well, I had my first losing vol trade since the beginning, so I'm not happy with that.
But you know what? You mentioned it here on the air, and that's why I like you, sir. So many of these quote-unquote gurus out there, they have such selective track records, right? Oh, I made $8 million on this one trade. What about the 800 others that you lost on, right? So at least you're man enough to come on here and discuss it with us, sir. So I like that. So, yeah, I definitely so the short answer is I was kind of like along a little strangle in VIX, and basically 2 weeks of no movement, just ate away at it. And I think the best trade in SPX and SPY has actually been, long gamma and just buying strangles, like buying a put butterfly and the SPY really wide and some calls, because you're getting like a $10 move every day. So those were paying. So part of my Dumasness on my VIX trade was like the strangles were going pretty good, but I'm not watching the juice evaporate out of my VIX strangle. So, why am I not making any money? So even though you might be doing this for a long time, you can still dumbass it every now and then. So that's at least for my own account. That wasn't really smart. So one thing to notice is look at the discrepancy in, short-term vol, like daily vol of SPY and what they're pricing the options at. It's a crazy disparity. And that has been paying well. So the thing that the pit crazies have been doing the most last couple weeks is just basically trading the gamma, owning gamma in the SPY, even though you might think it's crazy. It's been radically underpriced. And the strangles just owning what I would call, we try to do what I call a theta reduced strangle, which is you buy a put spread or you buy a put fly, kind
kind of aim it way down out of the money because you're talking about $10 to $15 moves in SPY, which normally you're not going to do, right? You're normally never going to do a trade like that. It's like, wow, SPY's going to move $10 tomorrow. You would not have said that in January, right? But it's just a normal day now. So you have to adjust your range on what you think is happening. And then you just price your trade according to how much decay you want to risk for a certain amount of time. So that trade has been going well, I would say, well enough to make up for my total screw up in the VIX. And I kind of knew better because, you know, when you're kind of falling in zone, so to speak, we were in the danger zone for a while, but, you know, kind of everything is sort of melting in there. And it was sized okay, but it was still just basically the vol got run over. And the biggest problem was we rallied from, like, I think I put it on, we were trading 23 or 2400 SPX. We rallied to 2800 SPX, and VIX is barely down. I mean, I think from maybe around, I think we're trading 55 to 42. Which, considering the rally, normally you would have, I think we would have been in like the low 30s, and then the trade would have paid. But it definitely did not pay this time. And, you know, I've at least closed half of it for a smoking. So the rally was so vicious. And I think that's what we'll just call him Other Andrew for right now. We'll get you a good nickname soon. Post some stuff on social media that Longo can make fun of, and I'm sure he'll come up with a nickname for you really fast. But but you've had this crazy rally. Now people are getting into individual names again. They're remembering that there's an individual name because SPX and SPY has just been crazy. It's been a great vehicle. But conversely, it's made VIX and VXX a crappy vehicle to trade right now because it's not moving. Vol is very high in those products relative to the movement. So all of what I would call like the trade Greeks are inverted in the vol products right now relative to the SPY or SPX. So you're paying actually very expensive dollars for VIX and VXX and UVXY juice in those options. And you're actually getting pretty decent prices relative in the SPY and SPX. So normally my trade is the other way around because usually the vol products, you know, into a move are underpriced and they make great opportunities. So I got caught right in the transition basically. Not huge, still same trade size. So, you know, I don't want one trade to really kill more than another trade, but it was a pretty hard reversal. And I think now we're at that point where, okay, is this real? Are we really getting out of this? You know, is the town of Portland going to come back for real? And, you know, I don't know how much higher the market goes, you know, but we want to see some things start happening now. But that will be the vol killer. Everybody knows that people are out of work. But if everybody can just like go back to work, they're all going to go back to work and leave their house. So I think that's sort of where, from a vol point of view, that's where the market is. And it's going to hang there until we have more of an answer. Right now, thankfully, the news has been better on balance. But, you know, the 40 vol and VIX is fair. I mean, you know, if SPX is going to move $100 a day, VIX is not going to get off the 40 handle. That's the way it is. So till that changes, I'll be doing the same trades. I'm going to be doing almost nothing in the vol products, though. I just don't think there's a real trade there until things start to bend over a little, or at least VVIX starts to come in a little bit. But that's where I'm hanging my hat today.
Technical term. When the vol products start to bend over, that's when you're going to get out there. But, you know, that is a bit of a sign of the times because we were talking not too long ago on this program and indeed on this network about long straddles. And, oh, my, that strategy actually is paying off. Well, these days, not so much, particularly out there, like you mentioned, in the vol products. And it is kind of interesting you're noticing that relationship with the SPY gamma in particular, because you're right, it usually kind of is the other way around. But now we're in this kind of weird framework where all of a sudden the long straddles, long strangles out there in a product like VIX, not really doing it for you anymore. But some nearer term SPY gamma, we're still getting the moves out there in SPY. Like you mentioned, you know, if we're still swinging a couple % a day, Ain't going to see VIX come in too much more on that front. You can't. I've always said many times, the math at the end of the day for volatility, for as deep and as complex as it gets, the core math actually pretty basic. And right now that basic math is saying we're going to hang out here at least for a little bit, but still a lot of interesting stuff. Speaking of VIX, we got so busy talking about what the TradeStation clients are talking about. I neglected to ask the other Andrew what's cooking over there from an overall vol perspective. So other Andrew, which will be your nickname for now until we come up with something better, what's on your radar? What are you guys noticing over there from an overall vol and VIX perspective, sir?
Yeah, so I think the Rock Lobster covered it pretty well in terms of the VIX. I mean, a few weeks ago, we hit a closing high for the VIX that surpassed that of 2008, the global financial crisis. So one thing I know for sure, and I'm willing to bet on the long term, is these VIX products do not stay high. In fact, if you look at some of the disclaimers in some of those VIX ETFs, they will say these eventually go to zero. They're used as a hedging tool, et cetera, et cetera. So it takes a lot of panic and a lot of energy to keep a panic going, like we had a few weeks ago where we were limit up, limit down. So that can't last long. But I agree with Andrew in what he said, is that we're still kind of high in the VIX, but we're in no man's land now. Now we've come way off the highs, but we still have a fairly high VIX. We're coming into support. We're kind of just bouncing around a little bit here. So I like to look at VIX, and I think a lot of our clients like to look at VIX as its own entity. It doesn't have to do anything. You were mentioning gold before. I think that's a great example. Gold rallied all of last year while the market was also rallying. So that was kind of counterintuitive to most traders out there.
Yeah, gold has been nothing but counterintuitive for the better part of the last month out here, which has been, I know, annoying at the very least to a lot of the asset managers and even the retail folks who like to dabble in a little bit of gold as their hedge. I've said many times on this network, I'll say it again, when it all hits the fan, correlation goes to 1. We saw that play out again, unfortunately, just over the course of this past month. That's why more direct type hedges, whether it's on, let's say you're in S&P and you put an S&P put spreads on, or on the volatility space, that's really the only two you can rely on in these types. And I'm not just saying that because I'm an options guy. I'm saying that because years of hard-won experience has taught us that fact, unfortunately. So yeah, if you're relying on gold to be your savior in these environments, hasn't exactly played that role. You know who can be the role of a savior in these troubled times, though? Because he just likes to talk us off the ledge. He's always optimistic. He's our permabull. Yep, I'm talking about Uncle Mike. Uncle Mike, sir, come on in. Give us a dose of that ray of sunshine you love, particularly right now in this Uncle Mike type of market, sir.
In looking at this, a lot of interesting things happening today in that it seems that the government, the Fed is coming out and saying that they'll provide more relief to municipal bonds as well as corporates, as well as even some junk bonds. So I think that's a big part of what's driving today's rally with where we're at with things. And one of the unique things with which I'm looking at right now is volatility in LQD, in corporate bonds. And that I think that with where things are right now in the corporate bond space, obviously the yields are not going to be as high as they were a while ago at some point, or just because of the fact that interest rates are going to be lower. But what's interesting to me is I'm just looking at the May straddle on LQD for corporate bonds. Right now, LQD is trading at roughly 130. The May 130 straddle is trading at close to $5. And so in something that typically really does not move that much. So the vol is not quite as high as it was about a week ago. But to add to your point, Mark, in that if you're looking for trying to use different asset classes to protect you in downside moves, the only real protection in the downside move to the market is a put option. That's the only thing that is going to help you. I mean, I've often said on my show, I'm not a fan of using volatility as a hedge just because of the fact that I still say that it's like buying car insurance to protect your home. Yes, we do have inverse moves typically, but like what's happening with gold right now, or what happened with gold throughout this time frame, is that with all these awful things happening, why wasn't gold or silver going upward? Now, granted, I am a silver bull for the long haul. I've talked about on the show a lot, but I'm in it because I actually like owning it for the long term. I don't like having it as a hedge. I believe in it as more of a diversification type of thing. So throughout all this, I think it's important that we understand the only real protection to the downside is either getting out and being in cash or a put option. Now, I'm going to be the bearer of bad news today, actually, or the bearer of we really need to watch this news, whatever way with which you want to call it. So at the peak of the market, when SPY was at roughly 339, from peak to trough, we went from 339 down to roughly 218 in SPY. Right now, we've gotten back about half of the losses based on what the market's at today. And so here's the concern. Here's why today is so important. I was talking on Monday how I felt 270 for SPY or 2,700 in the S&P 500 was a key number because that's where the number was when President Trump first declared a national disaster. And I thought it was important that we close above that for me being the bull with which I am. But I think today is important that we need to close above the 50% retracement level. So if you're a bear looking at this, and let's say you sold the top right exactly at the top and went down all the way to the bottom at the 218 level for SPY, where we are today, we're right around the 50% retracement level if we are in a bearish downtrend. So I think that today is a pretty important close that we need to close above it. And I'm not a fan of weekends. Now, don't get me wrong. My Lord and Savior Jesus Christ, Easter weekend is very important. Don't get me wrong. But this would be, if I was in this market right now with my aggressive trading, I would be biting my nails very much over this weekend if I had any significant position in this market. Just because of the fact that a lot of times over long weekends, if bad stuff is going to happen, it does happen over weekends. And we're right at that 50% retracement mark. So I think that if we can stay above these levels where we are right now and hold them over the weekend, I think this could be another level of support for the market, and I think this could be another leg up for the market. But if we start going down from here, I'm happy to say that I'm always short-term cautious, so I'll just leave it at that. So that's where we're at right now. That's what I'm seeing, and there's my optimism for the day, Mark.
I like it. Yeah, so much for your optimism. But I'm totally with you on the weekend risk. I've been saying it for a while here on this network. I know a lot of our audience likes to lean to the dark side. We've been saying it many times, keep it small, keep it manageable, keep it nimble, and for the love of God, don't carry a lot of crazy open short premium positions through the weekends. We've seen it quite literally over the course of the past few months, just how much awful news can break over the weekends. When markets are closed, you can't really do anything about it. So don't go hog wild with your crazy shorts going through the weekend. Take them off. Avoid biting the nails, like Uncle Mike was saying, if you can. If you are size long right now, I might be a little nervous about that too. Maybe it's hard to really. The hedges are still pricey. They're not as pricey as they were, but direct hedging still a little bit pricey. So you got to do that nice song and dance to pay for some of that. But still, these are interesting times. If you can't avoid having perhaps too much exposure over the weekend, I think that's probably a saner, safer course of action out there right now. Let's see what's not sane and what's not safe out there, what the markets are actually trading, what terms of paper and flow. Let's see. VIX has kind of been coming in of late in terms of volume. That trend continuing today. As of a few minutes ago, we saw about 206,000 contracts on the tape. If you've been watching VIX for a while and listening to a show like this, you probably have. You know that the ADV was well north, about almost 1.5 million, if not a little bit more, I think, out there at one point, at least 1.4 million. It's 830,000 right now, so this 200K is still only about less than a quarter of that, and that already substantially reduced down nearly 50% ADV out there in VIX. So far, at least, not exactly lighting the doors up out there. SPY, though, a little bit of a different story. This is kind of maybe relating to what Andrew was talking about earlier, with how some folks maybe not liking the bang for their buck out there in the vol space, but perhaps liking it in SPY, because SPY continues to do decent paper at about 4.25 million contracts as of a few minutes ago. The ADV nearly 6.5 out there, so SPY remains robust despite some liquidity concerns out there. SPY multiply listed, so that kind of helps a little bit, but still, we have seen SPY impacted by the liquidity concerns as well. But still, overall numbers remaining pretty strong. The S at about 850,000 as of a few minutes ago. The ADV about 1.75 million. That's a little bit light for the S. But again, these are unprecedented times, so it's decent paper, all things considered. The Q's at about 618,000. The ADV 811,000 out there. And IWM, a.k.a. Russell 2000, over 500,000 contracts, almost 550,000 contracts, almost at their ADV already. ADV 663,000. If you've been paying attention to TWIFO, and spoiler alert, we're going to talk about it again today because you can't not. Freaking Russell 2000 is kind of the crazy unsung, I don't know if you want to call it hero or perhaps villain, perhaps both, depending on the week. It leads the charge to the upside. It leads the charge to the downside. It's leading the charge to the upside again right now. The only thing that can even hang with it is the S&P 400, the mid caps. That's the only thing that's even close. Other than that, it's Russell 2000 leading the charge to the upside, to the downside. We do that movers and shakers every week on TWIFO. Spoiler alert, Russell 2000's up there again. These are, we've always said small caps are structurally more volatile. We're seeing that play out in very stark and dramatic fashion right now. And the numbers also reflecting that. A lot of paper out there in the Russell. Let's go on to the single names, Andrew, the other Andrew. Saying out there that a lot of the TradeStation clients are moving out to single names. Let's see if that's being reflected overall. It does seem like there's a fair amount of paper going up out there today because it cost you 173,000 contracts to break into the top 10 right now. That gets you to Ford. Ford's been moving a wee bit of late because all this talk about ventilators and everything else has been driving it and other things like that. Ford back over the 5 handle now. I know it was threatening the 4 handle in the other direction not too long ago. Up 50 cents, about 10%. Today as well, about 550 or so. Ford getting 173,000 contracts on the tape. Number 9, we got Square, 187,000 contracts on the tape out there for number 9. Then number 8, we've got Occidental Petroleum. Not a name we see in the top 10 too often, but some news going on out there in the oil lands these days. 192,000 contracts for them. Number 7, our friends across the street here, Boeing, 193,000. Number 6, AMD, 201,000 contracts. Number 5, American Airlines, 211. So some frequent offenders back in the top 10 here. Number 4, the stalwart that is Microsoft. Folks using online workflow, using Skype, using a bunch of online services right now. So Microsoft has been lighting it up for the past month and continues to do so today with 240,000 contracts. Number 3, data ends in Y. It means you got to talk about Tesla, 331,000 contracts. Number 2, Apple has the temerity to fall to number 2, 457,000 contracts. What could do it? What could unseat the stalwart that is Apple? Well, it's Bank of America. Interesting. 471,000 contracts on the tape right now in Bank of America. Really quickly see if there's any crazy biased paper. Looks like Occidental Petroleum leading the charge, 70% of that, 192,000 contracts. Coming on the call side of the ledger, not a heck of a lot on the earnings front this week because we're coming up on a new season. Also, this is a truncated holiday week, so bear that in mind. Not a lot popping off. WD-40, if you're so inclined, after the bell today. But let's keep on rolling. We've been going for a while here. We got to get into some unusual activity. So without further ado, let's get right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is usually the portion of the show where I let our Eye of Sauron run wild to ferret out some interesting, unusual options activity. But before we do that, folks at TradeStation running their own scanners out there as well. I'm kind of curious to see how theirs compare to our Eye of Sauron, see what is coming across their radar. So I will give you pride of place, Mr. Other Andrew. What are your screens? What are your platforms? What kind of crazy prints are you seeing over there in TradeStation land right now, sir?
Sure. So one thing I'll go with to go along, you were mentioning Ford and the ventilators. I'll go with that theme of coronavirus plays and things like that. So one that I saw unusual activity in was Abbott Labs. Yesterday, I saw a big block of 562 of the May 20th 9250s go off. So decent sized trade. It's an interesting play for a few reasons. Abbott makes that new test for the coronavirus. The tests usually take 3 or 4 days or a few hours. Now they're taking around 5 minutes rather than that long. So that's a big innovation as far as testing goes for the coronavirus. So even though the amount of coronavirus cases are dropping, testing will still be needed, in my opinion. So the catalyst is certainly there. Not only that, on a monthly chart, it's giving us a big monthly reversal signal technically. Basically, a monthly reversal occurs when a previous month has a wide range hammer candle, like Abbott does, and then the price has a daily close over that previous month's highs. So Abbott does have earnings coming up soon. So one way to look at this is as an EPS run-up play, which is one of my bread and butter setups. Basically, I found in my studies that leading stocks, growth stocks in particular, tend to run up into a print. So when a stock triggers one of my technical setups 2 to 3 weeks prior to an EPS date, what I'll do is I'll buy some out-of-the-money calls. What happens is the stock tends to run up if everything works out, of course, and you take advantage of that huge jack in IV. So a lot of these trades can double or triple in a short period of time. So what you can do is you could sell partial and then take the rest into the binary event, hopefully, playing with the house's money. So what TradeStation does for earnings season, we send out an earnings calendar so you can be on top of all the upcoming earnings reports as well.
Abbott Labs, that's one of our local names out here, out in the burbs. And you're right, they did make headlines not too long ago with a much faster coronavirus test. By the way, Abbott Labs, if you're not familiar, ticker symbol ABT, trading about 85.60, up about 70 cents today. And it's had a nice little aggressive V-shaped recovery since hitting its low of about 62.82 actually on March 23rd. It's bounced up, up over 20 handles since then. So it's been a nice little bounce, helped undoubtedly by the announcement of that test out there. But worth noting, there is an ex-div coming out. So if you see some paper coming up, ex-div, I believe, is on the 14th. So see a crazy explosion of paper in Abbott Labs in the near future. May want to not exactly pay it a lot of mind. There's probably some div-related paper coming out. Let's move on out to some other names that are lighting up our tape here right now. Mr. Rock Lobster, one of our old friends, lighting up the Eye of Sauron today. This is Liberty Global. I haven't talked about this one in a little bit, but it was a frequent offender here for a while. Ticker symbol LBTYK. Trading today, 1741. It got as low in the great sell-off back in March there of about 1436. A year ago, it was trading much higher. It was trading about 26, almost 27 bucks. The high is actually 27.84 over the past year. Looks like that was back in January timeframe, and also hit it again in September. So a couple of times over the course of the past year. This is the multinational telecom. In case you're one, it's not Liberty Mutual, the insurance company, listeners. But let's see what our Eye of Sauron found out here really quickly, because we're coming up against it here. ACH 15 puts going up for $129, almost $130. The offer was at $125. Only 195 shown there, though. And this guy wanted to get 35,654 done. So he had to pay a little bit through the offer to the tune of nearly a nickel. But he got his 35,000 and change off opening to the upside there on the Philly. Let's see, ACH. So there's going to be some earnings between now and ACH expiration. These next are on the 6th of May. So coming up in about a month here. Going to have a few cycles probably between now and ACH expiration. But ACH 15 puts, Mr. Rock Lobster looks like someone perhaps liking a little bit of the recent pop, but not wanting to give it up, and also perhaps not exactly feeling a lot more near-term upside, at least for the time being here. Paying through the offer for some size puts, Mr. Rock Lobster, in Liberty Global Telecom.
I see that, and don't you feel like you should sell those?
Yeah, it's kind of aggressive, I think is the technical term.
I just, I look at these yields now on a lot of these puts, and I'm listening to TOSAW with 2,800, like, okay, everybody's getting a little happy here about this rally. And I'm thankful that the news is better, like totally thankful. Like it's not as bad as it was. But are we just going to snap our fingers and everybody gets back to going again? And maybe the market's always forward looking. But I look at these puts like this, and you're looking at like an 8% yield, and if not, you're taking the stock. And what I was saying in the show last couple of times, like every couple of weeks, I've just been buying a little stock. I'm not trying to do anything like super cute. They're just holdings that I like. They got totally smeared, some of them down 30, 40%. But now you look at something like this and you're rallied at 2,800 and you're like, I just can't stomach that. So this is just a way to get long, just a cash secured put. In this case, though, I think somebody's just buying the crap out of them. And I don't know. It's not my favorite kind of purchase at this point. I have to be honest with you. Could be totally right. But, from a yield point of view, if you want to be a long holder, I think you'd want to be on the other side of those. But
yeah, it's a 51% vol, listeners. He's buying puts that are pretty much below the 52-week low at this point. And he's paying $1.30 for that privilege, so he's going to go $1.30 below that 52-week. It's hard to argue for buying these at this point. But c'est la vie, someone did, it seems like anyway. And, you know what? We'll keep an eye on these because it's going to be interesting to see. I have a feeling that $1.30 is going to go the way of the dodo. I have a feeling if this thing turns around aggressively, this guy won't be too sad about that. But still, $1.30, 35,000 times and change. Going to leave a mark. Let's move on really quickly to another name. This is a newcomer. We haven't really talked about this on the Odd Block before, at least not in any sort of recent memory. This is Nielsen Holdings. This is, of course, that information and data firm you all know and love. Used to, everyone knew about them for the television ratings and everything else they do out there. Different world these days for the Nielsens. Ticker symbol NLSN, trading $14.54, off about 36 cents or about 2.5%. This is a name that a year ago was trading about 26.25, and it got as low in the big sell-off as $11.62. So up about $3 from the low, but well off the 52-week highs here. Let's see what we got out here. What did our Eye of Sauron find? AUG, going out to AUG this time. More put paper. This time it was the AUG 14 puts. Looks like similar paper, Mr. Rock Lobster. Someone gobbling up these bad boys as well. The market was $1.60 at $2. Someone said, give me all you got at $2 to the tune of 16,700. These are opening over there on our buddies, the MIAX Pearl is where these went up. There are earnings between now and August. Obviously, next cycle for this one is April 30th, so coming up later this month. So Mr. Rock Lobster, it's like a similar narrative out here. Someone coming out and decide this one not quite hedging himself below the 52-week low. He's actually hedging above, which is a little better, but still. Someone paying through the nose, Mr. Meatball, or Mr. Rock Lobster, for expensive puts in a name that's already been beaten up pretty badly. I got a feeling you're going to take a similar view of these you did the last one, sir.
Yeah, again, this is a yield palooza here till August. Clearly you want to buy them. You think stock's going down. You want some protection, whatever. But they're pretty juicy. They're pretty juicy. And it doesn't mean the market can't go down. But Nielsen, you'd think that's a company that's still going to kind of be around, I would think. So again, a tough purchase. Maybe somebody's just really long and they want to head. I don't know. But again, a tough purchase. I think it's almost easier to, I'm looking at 2,800 and I'm actually thinking, okay, kind of where were the stocks at 2,200 and sell puts down there. And that's kind of what this looks like to me. As a purchase area. I mean, I'm only a cash secured put seller. I don't ever leverage short puts. As for being a market maker for so long, you just learn your lesson doing that a couple times, and you don't do it anymore. So, but in this case, I don't know. It looks like an expensive one to purchase, I would say.
Yeah, another expensive purchase. Tell you what, I'll put this in the to-be-watched category as well. I'll come back to it probably before August and see how this one's faring. But meanwhile, I'll see how you guys are faring as we keep on heading right on into the mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Welcome to the Mail Block, the portion of the show where we break down what you guys have on the brain. We also like to see what you guys at different firms, different customers, different clients, what they're up to, what they're asking, what is lighting up their tape over there. So let's kick things off back in the TradeStation hot seat. Mr. Other Andrew, sir, what are the folks at TradeStation, what are they hitting you guys up about these days?
So I've had a lot of people who are looking to make the transition from equities into options like I have. So I obviously can answer that question. I've learned a lot since I've made the move into options. And what I would tell them is you really want to stick to the liquid names first. You want to keep it simple. You want to choose a strike that has high open interest and makes sense based on the technicals. I think most of your listeners know this, but it doesn't hurt to reiterate. You never want to buy options at the market. You always want to use limit orders. Buying at the market is a very fast way to lose money. You want to keep track of that bid and ask and make sure that that spread is tight as well. Having a tool like TradeStation, we can really help traders determine whether they should go long options or sell options. We provide something called the IV rank in our platform that's going to help you with that. So if the IV rank is low, you should be long options generally. And if it's high, you should be selling options most of the time. Another game changer is you're going to have the ability to kind of eliminate that binary event risk. So that's definitely one of the pulls from equities over to options. And then lastly, I would say you want to study not just the markets, but yourself. So in the TradeStation platform, we have an application called Trade Manager Analysis that allows you to organize your trading data and does a great job. You can pull up all sorts of things. But I would say you want to take advantage of resources like this, regardless of who your broker is. You'll be so surprised by what you can find in looking at not just the market, not just charts, but sizing up your own trades. Why did I take this trade? Why did I size it this way? What strike was I in, etc.
Well, I'm glad to hear that the folks over there at TradeStation, I always wonder how, particularly the equity masses, if they're getting that itch to start getting lured to the quote-unquote dark side of options. These are certainly the environments where if you haven't considered learning about things like hedging or volatility and things like that before, where you were always like, hey, it's a 11-year bull market, why should I bother with these types of things? These are certainly probably the environments where you might want to perhaps reconsider that, take a second thought. Certainly the numbers of new listeners we're seeing certainly reflecting a lot of folks getting lured to the dark side. I'm glad to hear folks out there in TradeStation land having similar thoughts. Let's see. Let's go. We got a bunch of questions. Let's bump to the live. I always like letting the live jump to the head of the line out there. It's good listeners, if you have the time, and a lot of people do these days, join the live chat. We got Tony Weber. He's chimed in before, I believe. He wants to know, what is the simple VIX equation? VIX equation made easy. Oh, I believe he's referring to what I said earlier in the show, where I said that at the end of the day, the math for volatility is fairly simple, in the sense that the realized vol of the S&P isn't translating into a certain move per day, then volatility can't stay at that level. You ask something different. The VIX equation is a different conversation. We can get into that for some time, how they used to be at the money OEX, and they migrated it to at the money SPX plus skew, which has been a bone of contention pretty much ever since. You ask folks like Scott Nations and others, they'll say that was terrible. They want to remove that. There were lawsuits about it. They've added now into the weeklies into that equation. So there's a lot to parse there. But you mentioned VIX equation made easy. So I know what you're referring to there. And these guys actually sell worksheets and stuff all about that. So I don't want to steal his thunder. Mr. Rock Lobster, sir, our live listener here, Tony, he wants to know, what is your, I don't think you have a webinar about this, but what is your VIX equation made easy? What he really wants, I think what he's really asking for is, how do you guys have that worksheet where you like to back realized vol into an effective implied vol number, sir? Break it down for Mr. Tony in some simple terms. You only have a few minutes, sir.
Okay, I got simple terms. When you invoke VIX made easy, you must invoke the Rock Lobster. You know that by law, right? Even though we have shiny new Andrew, you still have to invoke.
That's why I tossed it to you. He threw in your trademark term in there. I had to.
So the easy way to think about it is VIX is 30 days forward, but a 1% move in an underlying back of the envelope, just go to your Natenberg book, is a 16 vol. So if you think about it, if VIX is 16, it's assuming a 16 volatility for 1 month on average. Right now, VIX is 42, so that's roughly 2.5% per day, right? Because 16 plus a half a hook is around a 42 vol. So VIX is assuming a 2.5% move per day. So but remember too is that's a 30-day average going forward versus what might be happening today or tomorrow. So the disconnect is, VIX might be 42 right now, but what's going on? What are the daily moves? And we've been having daily realized vol moves, in the 50, 60, 70, 80, 90% range. I mean, with frightening regularity, by the way, if you haven't been scoring at home. Also, VIX cuts up and down. So if we have a 7% up move, that is a massive move, quote unquote, VIX wise. That's 7 times 16. That's like 100 and 112 vol. So it's a very big move. So just the back of the envelope, the easy VIX is just you have to want to equate realized vol to what the actual implied vol is, but that's a 30-day out number. So you want to get your times and your time constraints and your expiration cycles. You want to get all that stuff in sync. So I could go on and on about this subject, but that's basically the easy way.
There you go. Check out Option Pit if you want to learn more. Just Google Rule of 16, listeners. It's a good starting point for figuring out how realized vol breaks down into vol and vice versa. It's a good little nugget to have in your arsenal. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. I know you have a lot of questions, so if you have more questions, don't worry. We'll try to squeeze more in on TWIFO coming up in a little bit. So if you didn't get a chance to get your question answered here, and I know we've been talking about a lot of fun stuff already, so we'll try to get to it on TWIFO in a little bit. Before we do that, let's go back around the horn. Let's start in Uncle Mike land, sir. Uncle Mike, sir, what are you keeping an eye on? We have, obviously, as you mentioned at the top of the show, an extended holiday trading week, so some interesting nuggets to unpack there. What are you watching? You said you're going to be biting your nails if you're long. I know you're not size long, so you don't have to bite your nails, but what are you watching for the rest of this week into the weekend until we can gather here together on Monday, sir?
Well, just continuing to watch the news. I think that with everything that we have going on, anything can still happen. The Fed does still, even when you think the Fed's out of bullets, they still continue to have more bullets, it seems. So curious to see what we do with any type of more government interventions with this. And I'm just hoping and praying that we flatten this curve, as everyone's saying. Lost a lot of people in New York again yesterday, and just my prayers are with everyone with this awful virus, and hope this can get resolved as soon as possible so we can get back to regular everyday life. But even more so, and even of more importance, is that people stop dying and that people stop getting sick. This virus is bigger than us. It's bigger than markets. And just my thoughts and prayers are with everyone who's been affected by it. And for all you first responders, doctors, nurses, and the essential people out there, thank you for doing what you do.
Don't forget those grocery store clerks. Everyone's talking about first responders, and they're great. We love them. But they obviously signed up for this. The grocery store clerks, people who are keeping our food supply and our pharmacies open and running, they didn't sign up for this. They have low-wage jobs. They don't have the training or the resources to deal. And now they're literally on the front lines of a pandemic. So I always make sure whenever I do anything involving them, I try to at least tip handsomely, because those folks need it right now. And they're not exactly getting the love or the masks or any of the equipment that the first responders are. So take care of your grocery store and your delivery and everyone else, folks, who are keeping our food supply viable during this madness. All right, Mr. Other Andrew, sir. We'll get you a better nickname, don't worry. What are you and the Trade Station folks, what are you guys keeping an eye on for the rest of the week into the weekend, sir?
So as far as the general market is concerned, one thing that I'm looking at for a longer-term perspective would be the 200 SMA weekly. That's something that's contained the entire move since the financial crisis, whether it be 2011, 2016 during Brexit. 2018 during the trade dispute with China. So that is something that I'm definitely watching as far as long-term goes. Now, shorter-term, one of the more important things that I believe will drive this market is crude oil. It's been a leading indicator. The sell-off really started to accelerate in crude oil prior to the market. So it's kind of been a little bit of a leading indicator. The OPEC decision has got pushed till Saturday. So TradeStation clients and anyone for that matter can follow along all the news on our Insights blog, which is insights.tradestation.com. And the last thing is what I call price action versus news. One of my biggest strengths, I would say, as a trader is sizing up the price action versus the news. When we got that initial jobs claim number of 3 million, that was a terrible number, but the market really wouldn't break down. So that was a great example of how we want to be following not the news itself, but rather the reaction to the news. And the last thing I'll finish up on as of the beginning of this recording, I don't know if that's changed, equity markets are on pace for their third 90% upside volume day in the last 5 sessions. So the close is obviously key, but if we finish this way, it would be only the third occurrence in the last 30 years. So the other 2 occurred in 2016 as well as 2011. So we want to keep an open mind. If coronavirus has taught us anything, it's that. Lastly, one thing I wanted to mention is that anyone listening to this who's interested in TradeStation, please go ahead and visit tradestation.com/optionsinsider. That's tradestation.com/optionsinsider. What we've done is we've set up some special onboarding for any clients who decide to check us out from the show.
All right. And with that plug, we got to keep on rolling here. We got more shows coming. But before we go, I know we're running long here, but let's go back around the horn. Andrew just mentioned it, the other Andrew. Folks want to learn more about what's going on over there in TradeStation land. You got the great blog to check out, the Insights blog. You don't have to be a TradeStation client, actually, to go check it out. So you can go check it out. It's pre-login, as they like to say, so everyone can get access to that great information. Of course, if you like what you hear in TradeStation.com/optionsinsider is the place to go, so they know you're listening to this show. So if you like what you're hearing, head on over there, kick the tires, and light the fire. See what they have to offer you. Andrew and David before broke down a lot of that good stuff for you. TradeStation.com/optionsinsider to learn more. And let's keep going. Mr. Uncle Mike, sir, same question for you. If folks are intrigued, and I could see why in these markets they might want someone to help hold their hand. Maybe they want someone to bite their nails for them over this weekend. Where should they go? What should they do, sir?
Hey, go to stcharleswealth.com. Feel free to set up an appointment with me. It's right there on my site. And or feel free to give me a call, 630-885-0017, if you'd like to work with an advisor who is not afraid of the word implied volatility.
He's not scared. Hit him up, stcharleswealth.com to learn more. And last but not least, the original Andrew, a.k.a. the Rock Lobster. Sir, if folks are intrigued, they want to check out your Vol Trading Club, all the other good stuff, where should they go? What should they do? Maybe they want Vol made easy, sir.
Go to optionpit.com. We are doing a mentoring special right now. So if you want to learn how to do all this trading stuff, if you're not worried about all the things I say about realized vol and vol this and putting a position on and all kinds of stuff like that, we teach people how to position. So check out optionpit.com and go to the mentoring page and put your learning hat on.
There you go. Put your learning hat on. Optionpit.com is the place to go. And if you want to keep that learning hat on and you're listening live, stay tuned because we're going to have a very special TWIFO in about half an hour. I just found out one of my other co-hosts has to hop on a plane to go all the way across country to rescue his poor college-trapped son. So that means we're going to have a bit of an option block reunion coming up on TWIFO in a little bit. Going to be joined by the Rock Lobster and Uncle Mike. What a rare bonanza. Each of them gets a hot seat on the show. So if you have questions, I know you have a bunch of them. We're going to talk a lot of equity because that's what's going on right now. So if you like equity vol, I know you do. Stay tuned. We'll talk crude and a bunch of other stuff there as well. So stay tuned. About a half an hour, actually about 25 minutes now for TWIFO. In the meantime, you get a nice, fun Options Playbook radio in there for you. We got Brian breaking down, I believe, some FOMO puts in all states. You'll check that out. We'll be back in 25 minutes. If you're listening after the fact, just hit next on your device of choice. And we'll see you there as well. And, of course, we'll see you back here, not Friday for Vol Views, but right back here again on Monday for more of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.